In the world of liars, scammers, and thieves, the SEC is joining in on the fun. The U.S. Securities and Exchange Commission just filed today a temporary restraining order against Binance to freeze all of Binance's assets. This comes just 24 hours after SEC sued Binance. And in that 24 hours, $780 million was taken out of the exchange by customers, investors, and anyone with half a brain. Because as we have seen time and time again, when it's the fan, your crypto gets locked into these exchanges, and then it's nearly impossible to get your money out. So the crypto exchanges basically just become another giant mechanism for wealth transfer to these guys, the scammers. So this proposed emergency order by the SEC filed this very evening, which is pretty crazy, supposedly would still allow customers to withdraw and deposit. But the SEC says that the focus of this restraining order is to prevent Binance from accessing customer funds. Apparently everyone just wants to access customer money, with the SEC attacking full-blown via the lawsuit against Binance and, of course, CZ, CEO Changpeng Zhao, accusing him of alleged web of deceptions and blatant disregard for U.S. security laws. So these outflows of $780 million, nearly $1 billion, was not just for U.S. money. Global scare frenzy. I'm sure the hardcore crypto guys are going to call this FUD, of course. Fear, uncertainty, and doubt by the U.S. government. But of course, this is not a joke. This will really hamper the business of crypto exchanges in the U.S., which honestly, we've all seen our share of scammers. Voyager, Celsius, Crypto.com, FTX, of course, Sammy Scammy. All these guys kept users from taking their money out. CZ did tweet out that Binance.US is the one receiving the emergency restraining order, not Binance.com serving the international community, where apparently the holding company for Binance.com is in the Cayman Islands. Crypto exchanges must be really good business for the Caribbean islands. They're always headquartered in the Caribbean. So according to Reuters, SEC's problem with Binance.US, not .com, is that Binance artificially inflated its trading volumes. Big no-no. Diverted customer funds to a different location, who knows, and even failed to restrict the US customers from accessing Binance. On top of the SEC headaches, Binance also is suffering from legal actions by the Commodity Futures Trading Commission, the CFTC, and the Justice Department. Big problem. Who knows, maybe the SEC learned something after the whole FTX collapse, because in Tuesday evening's filing, they said the SEC respectfully submits that this relief is necessary on an expedited basis to ensure the safety of customer assets and prevent the dissipation of available assets from any judgment, given years of violative conduct by Binance, disregarding the laws of the United States. So are they trying to prevent something from happening? Do they know something that customers don't know? Is Binance just another giant crypto scamming exchange? Well, maybe. That's what the SEC thinks. Love or hate Bitcoin, love or hate crypto. If the order is granted, it's a big money grab. So if the order is granted, if it's accepted, Binance would have to surrender control over customer assets within 5 days. That's a big deal. And all of this is actually the biggest steps that the SEC or the government in general has taken against crypto this year. This is pretty aggressive, whether it's all a scam or not. There's a lot of money on the line. So not only is the SEC going after Binance, but they're also going after Coinbase, the US's largest crypto exchange. They have a lot of money. So they're also charging Coinbase with violating securities laws. Big problem. So in the civil complaint filed Tuesday, the SEC accused Coinbase of operating its crypto exchange as an unregistered national securities exchange, broker, and clearing agency. Now the next part is why I think this whole thing is a money grab. Maybe they're paving the way for CBDCs. Get crypto out of the way. According to the court documents, since 2019, that Coinbase has made billions and billions of dollars illegally by facilitating buying and selling of crypto asset securities and exposing investors to significant risk. See, it's all for their own good. I don't really see them going after casinos or lottery tickets, sports betting, gambling, online grifters. If crypto is such a giant scam, which many think it is, why don't they go after everything that could be a scam? I.e. the casinos, those gaming machines. They're basically computer programs completely rigged to take your money. a wealth transfer. Okay, so Coinbase stocks went down, no surprise there. On top of that, the CEO, Brian Armstrong, he did say that the SEC complaint is exclusively focused on the whole securities laws, exclusively focused on what is and is not a security. And of course, he thinks and is very confident in his version of facts and the law. In the end, the biggest winners are, of course, the lawyers. The director of SEC's Division of Enforcement. So he says, Gerber Grewal. He said, you simply can't ignore the rules because you don't like them or because you prefer different ones, adding that the consequences for the investing public are far too great. So all this is for the security of the public, supposedly. This guy's no dummy, of course. This guy's no dummy, of course. He's gotten extremely, extremely wealthy. So he makes some very good points. He tweeted out a few things, and here's a screenshot. So the SEC reviewed their business and allowed them to become a public company in 2021. Excellent point. So the SEC allowed them, and now they're going after them. This is why I suspect there's something behind the scenes, kind of a money grab, wealth transfer, or simply to get them out of the way for CBDCs. We went on to say that the SEC and the CFTC have made conflicting statements that they don't agree on what the hell is a security or even a commodity. And what's interesting is that the SEC is taking to New York to sue them, to sue Coinbase. Maybe too many people are putting their money in crypto instead of banks. Crypto scammers, bankster scammers. A main problem with the securities laws is the whole staking. You lock in some crypto, you leave it with the exchange, and they give you a high annual percentage rate in return. You earn interest for leaving it in there. And this is vastly higher than your average savings account, which is basically next to nothing. So the SEC doesn't like that. Doesn't like people getting more with crypto than they would with banks. Now, I'm not saying that all this stuff is wholesome. All I'm saying is that they don't want them to compete with traditional banks. Here's a copy from the official U.S. Securities and Exchange Commission Twitter account. Today, we charged Coinbase. At the end, it says, for failing to register the offer and sale of its crypto assets, staking as a service program. That's the whole interest gaining service. Clever person responded with this. Meanwhile, the SEC approving listing of Coinbase on the stock exchange. Oof is right, because they approved this whole shebang. Here's a copy from Reuters back in 2021 saying Coinbase gets all the clear from SEC, setting the stage for a landmark listing on the exchange. So in the end, the lesson is very clear for Binance and Coinbase. They did not learn from Scammy Sammy. They didn't learn the biggest lesson from SBF, which of course is to donate as much money to as many politicians as possible. And of course, any empire, especially the American empire, the petrodollar, anything as powerful as the dollar hates competition to their fiat financial system. Just a given. So we'll see how everything plays out. Pretty interesting that the government is going really aggressively after these guys. The biggest exchange in the world and the biggest exchange in the United States. All right, guys, that's it for this one. Smash the like if you haven't. Please do subscribe, and I'll see you in the next one.